Kia ora, I'm Nadine.Higgins and welcome to your personal finance podcast, The Prosperity Project. On this podcast, I'm on a mission to empower you financially. I am a columnist and a journalist, an investor, a financial advisor, and the mum of a toddler. But I do not claim to be the font of all knowledge. I'm still figuring it out too. And that's why I'll be bringing you the experts and mining their big brains for all the things you and I need to know every week. Last week's government budget was chock full of things that are likely to affect your back pocket in one way or another, with changes to KiwiSaver, Best Start, JobSeeker benefits and working for families. But if all the headlines sent you a bit cross-eyed, don't worry. Today we're going to step you through the details so you know what you're dealing with. To help us do that is Jenée Tibshraeny, the Herald's Wellington business editor. Hi, Jenée.
Hi, Nadine. How are you?
Good. Thank you for joining us after a very big week, no doubt, in your world, covering the budget. I wondered if we could start with your overarching impression of the budget. It definitely seemed like there was a little bit of penny pinching over here to fill a hole over there.
Well, that's exactly what it was. As Nicola Willis would say, it was a budget that required a lot of reprioritisation. The government was trying to still deliver some schemes to help spur economic growth, but it wanted to do that without taking on a whole lot of additional debt. Now, the government is still taking on a lot of debt because we haven't paid down our COVID-19 era debt, but there is a necessary amount of robbing Peter to pay Paul to achieve this. Now, I call this a bit of a true blue budget. It's largely a budget where the government is supporting businesses to support the economy. Unfortunately, for some, that is coming at the cost of people involved in those pay equity cases. You know, their pay rises are not going to be as large. And also, as we'll discuss today, members of KiwiSaver.
Yeah, which is a cool 3.3 million of us, I guess. So that affects a lot of people. I wonder, though, is it not a robbing Peter to pay Paul budget, but more like a robbing Pauline to pay Paul? Because it does seem like lots of those changes affect women, not just pay equity, but Best Start and even that government contribution to KiwiSaver that many women on maternity leave, that might be their only contribution to KiwiSaver that year.
Yeah, look, putting a gendered lens on this always gets controversial. You know, we can do this to some extent, but the second largest new type of spending in the budget was for this tax write-off or accelerated depreciation, as it's called, for businesses that invest in new property, plant, equipment. So that's a positive. You support businesses to invest. That affects the whole economy, makes things more efficient and so on. But that is largely being paid for by changes to pay equity that largely affects women. Also, with the KiwiSaver changes, the government is, halving the contribution that it makes to your KiwiSaver if you contribute over a certain amount. Now, the Retirement Commissioner was among people who said, well, actually, one change that would have been good was if the government required employers to keep contributing to your KiwiSaver, even if you stop contributing. For example, if you go on maternity leave and you can't contribute. And that sounds rather specific, but if you're going to change the scheme, there are ways of doing that might have better supported people who currently aren't as well supported by the scheme as they could be.
Let's talk about KiwiSaver and the decision to require a 4% contribution up from the current default 3%. Is that going to be difficult for a large number of people to make that jump, even though it's coming in slowly? If you're living paycheck to paycheck, even 1% of your salary could be the 1% you need.
Yeah, well, look, that's a good point. And I remember when I got my first job out of university, the thought of contributing money towards the scheme for my retirement, which just seemed so far in the future, was crazy. And when I was trying to pay rent and all that type of thing, the Inland Revenue, in its sort of advice that it prepared for the government, said that it couldn't gauge what it thought the impact would be on this. It's very hard to measure. So I think we'll have to wait and see. But I must say, I think that the power of an opt-out is quite strong. Like, if the default is 4%, you have to go to a bit of effort to say, no, I want to do 3%, or I want to opt out altogether. I wonder whether a lot of people just won't be bothered doing that and will just run with the status quo.
And I think that probably does speak to human behaviour, but I thought the interesting change is your only options to date have been 3% or higher or nothing. You know, you couldn't go down to lower than 3%, whereas now you can do 4% or you can opt to stay at 3%. So is 4%, it's not the minimum, is it? It's just another option.
Yeah, exactly. It's the default option.
Jenée, I know it's different for all of us and there are so many different variables that go into it, but can you give us an idea about how much more we might have at retirement on the basis of upping our contributions from 3% to 4%?
Sure thing. So let's say you are 40 years old, you have an annual income of $100,000, you have $50,000 in your KiwiSaver, and you are in an aggressive fund. At retirement, you'd probably get currently about $360,000. After the changes, you'll probably get $420,000. This is according to some projections on the Sorted website. So you're looking at a $60,000 increase at retirement if you're in that scenario. So look, that's definitely a fair chunk.
Yeah, it's not insignificant. I guess some people might say we still need more. Is there anything else, any other lever the government could theoretically pull to result in us having a higher balance?
Yes, there is. Now, this, I think, is quite a big deal that the government doesn't discuss. And this is a type of tax that is applied to the contribution that your employer makes. So currently, when you think your employer is making a 3% contribution to your KiwiSaver, it's actually less than 3%. It's 2-point-something% because that contribution is taxed. Now, currently, the government receives $2 billion a year from this, due to this tax. If it removed that tax, or if it cut it, that would be an extra $2 billion in our KiwiSaver balances every year. That would actually make a pretty big difference.
Well, and actually, that means there's a circularity to that, because if you up the employer's contribution rate, which is taxed, the government collects more tax.
Yeah, that's right. The government does collect more tax. Now, this all gets rather complicated, but you could say that if your employer doesn't increase your wage as much, you're paying less income tax. So there might be some offsetting there. But for sure, this whole KiwiSaver tax thing is not widely discussed. So I can't see it changing under the current the setup. But, it's a fair point to make. We think that we're getting the full 3% or 4% from our employer, but we're not actually getting that full amount.
I'm not a KiwiSaver tax expert or a tax expert at all, but I wonder whether this is you tax it on the way into KiwiSaver so that you don't get taxed on the way out of KiwiSaver, that what you've got in your retirement savings is the exact amount that you can pull out at 65.
Yeah, look, that may well be the case.
We're just going to take a quick break. We'll be right back. Welcome back to the Prosperity Project. We are picking through the details of the budget with the Herald's Jenée Tibshraeny. Businesses often talk about how they can't just continually absorb more and more costs, and this is undoubtedly a big cost. Is that why, do you think, that they're phasing it in over several years?
Yeah, look, I think they need to give individuals and businesses and fund managers time to prepare for the change. I believe, and the Inland Revenue believes, this will affect wage growth. I think that makes sense. Unfortunately, for those of us who earn wages and salaries, that's unfortunate, but that's probably what will happen. Interestingly as well, the Inland Revenue and I believe the Treasury actually advised the government against lifting the contribution rate now. So Inland Revenue, and I think it was the Treasury, said they were worried about the impact it would have on businesses and thought that it might actually offset some of the positives in terms of what the government's trying to do to stimulate growth and support businesses. They thought, maybe the government should just hold off a little bit on increasing the default contribution rate until, the economy is doing a bit better. So I thought that was quite interesting because, we often hear from experts that we need to do more to save for our retirements. But I was surprised that the officials thought maybe now's not the right time.
And especially as this is a government that bills itself as being very business friendly, if the advice has literally been maybe this is not the right time to put this on businesses, that is really interesting. The other thing I thought is really interesting is the number of changes they've made to move towards means testing. So if you earn over 180,000, you don't get any government tax credit to your KiwiSaver. And look, given they've halved it, it's like $260 a year. I don't know if anyone on that salary level is really going to squawk about that, but it's the principle of it. And they've done the same with the Best Start credit, which, for the benefit of anyone who doesn't know what that is, it's a payment made to people in the first year of their baby's life after their paid parental leave has ended. And it's about $70 a week until the baby turns 1. In the first year, it's not means tested, but it is now going to be. And that's going to affect a lot of parents. Is this a move towards making that approach of means testing more commonplace?
Look, I think it is. Just in terms of the KiwiSaver again, the Inland Revenue reckons that means testing, that government contribution, would only save $40 million a year. Like, that isn't much money at all for the government. So, in fact, the officials advised the government to just scrap the government contribution altogether rather than means test it, which again I thought was, a pretty big idea from the officials, something that the government would have gone down like a lead balloon with the public. Politicians did that. I don't think I personally wouldn't have supported that. But you have to wonder, if you are means testing, you are adding more complexity to the system. You're also annoying people. Like if you're telling people, look, you need to go out there and be productive and work hard and earn more money, and then you're saying, okay, we're going to, there comes a point you don't want to penalize people too much either. It doesn't send a great message to some extent. And if you're doing all of that to save $40 million a year when it comes to KiwiSaver, is it worth it? But I think more generally, generally speaking, means testing, generally it's of course a way of keeping a lid on costs. And it also just aligns with the philosophy of a right-leaning government versus a left-leaning one, which is just less state support and a little bit more take care of yourself, and only if you really can't, the state will be there to provide support. I had a chat actually when the new head of the Treasury, Ian Rennie, got the job. I think it was about towards the end of last year, and he talked a lot about the need for means testing, and I just guess the cost of having all these universal policies, government giving money to people who don't really need them.
But the natural extension of that, and this will annoy some people, the natural extension of that is we give the pension to those who do not need it.
Oh, Nadine, now you are hitting on an issue that I think is possibly one of the most controversial issues for voters. And this is the issue that riles people up. Again, if you means test, the issue is, what do you means test? Is it income? Is it value of assets? It gets awfully complicated. You might have inherited all this family land in the batch and so on, but you might have a small income. How do you deal with that? And then the other thing is, I think the main thing, by far the biggest thing when it comes to retirement policy, is long-term signals. So you can't change the rules on people. You have to give them lots and lots of warning before you do that. And I think means testing would be a political nightmare.
Basically,
it might make
anything
sense
to do with the pension, tends to be political dynamite.
Yes.
On the note of moving towards that philosophy of people looking after themselves, there was quite an unexpected change to the 18 and 19-year-olds who are currently eligible, if they're unemployed, to the JobSeeker benefit. The government seems to now be saying you are still your parents' responsibility, even though you're an adult and you could vote and go to war and drink and have a child and all of those things. If you don't have income, don't expect the state to sort you out.
Yeah, that's interesting. And I talked to the Prime Minister yesterday actually about this, and he thought this would be a really popular policy with voters, their constituents, saying if you have a kid who's sitting there gaming, not getting a job, we're not going to help them out too much, kick them off the couch, get them employed. People like that sort of sentiment, Back in our day, kids are out working. Now kids are just sitting there playing on the computer or whatever on TikTok.
But equally, you also hear stories of people who've put in 100 or 200 job applications and they just can't find one.
Exactly. And I think this the thinking here, I believe, is that people who go on welfare when they're younger are more likely to stay on it for longer. Now, this is no doubt a very complex area of work and psychology and economics and all this type of thing, but I wonder whether this is aimed at addressing that. But, no doubt at that age it's tough. You're trying to get your foot in the door with work. People say you need experience and you're saying, well, please just give me some. Hire me, please. It's, it's not the this is the thing with reprioritization, right? You're going to have some very unhappy customers.
Yeah, some happy customers, some not so happy customers, and like all governments, I guess they speak to the ones they want to vote for them in large part.
Exactly.
And the changes to KiwiSaver, and I mean, look, successive governments have made changes to KiwiSaver since its introduction, but do you think that does run the risk of not destabilising, but reducing the trust in the system? Because everyone who's in it, their money is locked up, but the rules that govern it are subject to change.
That is a really good point, and goes back to what I was saying before around the importance of consistent policy when it comes to something like retirement savings. You can't go changing the rules on people too dramatically because they're planning their retirements, planning their lives based on certain assumptions. You can't change them too much. But I think when it comes to the changes that have just been made, I don't think they are severe enough to erode credibility materially.
Nicola Willis did make the point that the advice had been that the government tax credit doesn't actually encourage people to save more into KiwiSaver. But I wondered whether the exception to that is the self-employed, because that's the only real incentive they get, because they don't have an employer to put money in on their behalf. The only benefit was the tax credit. So does it water down its appeal to those who employ themselves, which is a huge number of people?
For sure. I think, at the start, I mentioned that the missed opportunity in terms of requiring employers to contribute, even if you're on maternity leave, for example. But the other big missed opportunity is exactly that, the government stepping up to do more to incentivize self-employed to be part of KiwiSaver, because if they're hardly getting a government contribution, they don't have an employer contribution because they're self-employed, then what is the incentive? A business owners, there is no real incentive for them to be part of it. So missed opportunity there. I mean, from the government's perspective, they might say, well, sure, that's fair. But as I said before, the second biggest new spending initiative in the budget was this accelerated depreciation tax change, tax support for businesses that invest in new equipment and tools. So arguably, again, politics, they could say, okay, business owners, we're not helping you here with KiwiSaver, but we are helping you here with this $6.6 billion tax relief over 4 years. Take that. That's pretty good.
Totally, but so many of the self-employed might well be sole traders who are not necessarily investing millions of dollars in plant and equipment. They might have, a laptop and an internet connection. And the way of the world is that more and more people are being employed that way.
Yeah, look, I mean, for sure, that tax change will, benefit certain types of businesses more than it will others. Interestingly, the Inland Revenue gave the government advice on whether it should cut the corporate tax rate rather than do this accelerated depreciation thing, which it's done, which would be a different way of supporting businesses' growth, so on. But the advice was that was going to be quite a bit more expensive. So they said cutting the corporate tax rate by 5 percentage points would have costed, just off the top of my head, just over $10 billion over the forecast period versus $6 billion for the option they went with. So, there are different ways, but if the government's trying to keep a lid on costs, means that does limit options.
Previous governments have been criticised for spending too much so that they are basically causing inflation, keeping interest rates higher. Has there been any analysis done as to where this budget sits on the either causing inflation or resulting in lower interest rates?
I think the response has been that it was the budget was largely as expected if you look at it from a macroeconomic perspective. That's largely because Nicola Willis said how much more new spending there would be before the budget. And actually the Treasury's forecast bond issuance program, so the amount of debt the Treasury reckons the government will need to issue, that hasn't really changed from December. And in terms of the market response, economists and things, they don't see the inflation rate being any higher or lower than it otherwise would have been the case after the budget. So, they still believe that the Reserve Bank will cut the OCR a few more times, perhaps to just below 3%. The budget hasn't changed that view. I think, Nadine, the thing that would erode people's trust in KiwiSaver is if further changes were made to use KiwiSaver for an entirely different purpose, so for something else the government is trying to achieve. For example, there's a lot of talk at the moment about using KiwiSaver funds to invest in public infrastructure. People are saying there's all this money sitting in KiwiSaver, let's deploy it, use it for new infrastructure that we need, or state housing or something. I think that's fine, but for me as a KiwiSaver member, my trust would be eroded if the primary goal, or there's a perception that the primary goal is for the government to use my retirement savings for infrastructure rather than borrowing more or getting those funds elsewhere. I want to be certain that the top priority is maximizing the returns on my investment for my retirement. So I think those sorts of changes might actually do more to erode credibility around the scheme.
Absolutely, because it's all well and good having a road of national significance or a tunnel across the harbour or whatever, but if you can't afford to retire because it hasn't delivered you a return,
yes,
that's a terrible outcome for an individual, regardless of what it's like for the country as a whole, because we all live in our own individual silos. A very good point. Well, Jenée, I'm sure that more will filter out, as it always does, over the coming days and weeks. But thank you so much for your analysis.
Oh, it's great to chat. Thank you for having me.
Thanks for listening to The Prosperity Project. You can follow this podcast on iHeartRadio or wherever you get your podcasts. And please do chuck us a rating or a review while you're there. For more personal finance and business content, head to nzherald.co.nz. And please do feel free to get in touch with your questions and your stories, nadine.higgins at nzme.co.nz. A reminder, though, that this podcast is informational only and nothing we say here should be considered personalised financial advice. But also remember that while listening to this podcast is hopefully going to be additive to your financial knowledge, and that is fantastic, knowing stuff doesn't create change. Doing stuff does. So what action are you going to take today to make your life more prosperous? My producer for this episode is Ethan Sills. Sound engineer is Richard Martin. I'm Nadine Higgins. Thanks for listening to The Prosperity Project.